Today, an exciting announcement, a new summer series of videos, and something very important that you're going to need in your small business to help you be successful: integrity. Let's get started. I'm David C Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win. All right, everyone. So I promised something big, a new announcement. You can see it right over there. Labor Day 2024. I've got a new book coming out. I just got the proof printed copy delivered to me for final review. So this is going to be available as a paperback, Kindle, and also audiobook, and it's going to be available as a PDF as well, Buying versus Starting a Small Business. And to celebrate the new book, the book is sponsoring a new summer video series for 2024, which is the Get Into Business 101 series. And I'm going to be talking about sort of the basics of buying a business or starting a business. And I know I don't talk much about starting a business on this channel. I talk mostly about buying them. The summer series is not going to be stuff from the book. It's entirely different. The Kindle pre-order is available. So if you want to make sure that you get it at the lowest possible price and you make sure that you get it on the day that it's available, head over to Amazon, look up Buying versus Starting a Small Business, and you'll be able to pre-order the Kindle book today. So I promised we'd talk about integrity. So I wanted to have this chat because one of the things that I've noticed throughout my career is that in order for a small business to really be successful, you need to do something very important, which is to grow your customer base over time and have the people that you serve come back and be a customer again, right? Very easy. So you're doing advertising, you're doing publicity, you're doing marketing, you're trying to attract new customers to your business, and then you serve those people. And if they don't feel like you treated them very well, they're unlikely to recommend you and they're unlikely to come back again. So it's going to be a very difficult headwind to be successful if you cannot create these positive, long-term, lasting sort of feelings in the minds of the people that you do business with. So I was digging around for some various articles and I found this one. Let's take a look at this. This is from positivepsychology.com. And this, here, let me put myself in here. It talks about integrity in the workplace, and it's written from a big business point of view. This is a small business channel, and so I'm going to be pointing out several things in this article and kind of tying them into the whole small business kind of space. So down here it says integrity in the workplace matters. In fact, integrity is often viewed as one of the most important and highly sought after characteristics of both employees and employers. A recent global integrity survey from EY, that's a big accounting firm, reported that 97% of respondents agree that integrity is a vital foundation for any corporation. Despite the sweeping agreement that integrity offers significant value to organizations, EY highlights a widening gap between awareness of integrity's role in business operations and diminishing standards of conduct. So what does this mean? It means that you're hard pressed to find anyone who disagrees that integrity is important. And it seems like there's this mismatch between people saying that they have certain integrity or values and actually delivering on them or behaving in a way that is consistent with them. Interesting, right? There's a couple of big examples from different headlines around the world. And so these are from articles from the last decade that have all now been finalized, and court cases and everything have been done. So one of them was a big HSBC bank case of money laundering back in 2012. You know, The bank obviously is filled with people that do act with integrity, but someone within the bank decided to take care of some criminals' money, and then the bank was implicated in this money laundering scandal and forced to pay a fine of $1.9 billion. And so this would be an example of talking about integrity, morals, values, ethics, etc., and then being found not to behave in that vein. Another example is Wells Fargo's. This is from 2016. Wells Fargo Bank had a scandal regarding fake accounts. Okay. So employees were creating accounts on behalf of customers, just making them up. And uh, it was because they were highly incentivized to do this. And we're gonna talk about the incentives here in a second, but I'm going to get back to the Wells Fargo example. But very rarely are you going to find an institution, a big business that um, has a policy of doing things in a certain way that would be considered to be immoral or unethical. There is one example that I'm going to share as we go through here that I have heard of firsthand. But let's take a look at the article and see how it continues down here. It says, "What is the meaning of integrity?" Okay, let's talk about what these words mean if we're going to use them. So, according to Peterson and Seligman, integrity is a character strength involving honesty, morality, and trustworthiness. A key feature of individuals with integrity is their ability for consistency and self concordance. That is alignment between their values and behaviors. So you're walking the talk, right? You're saying, I believe in honesty. I believe in fair dealing. I believe that I'm going to, behave in a trustworthy fashion. And then you actually behave in that vein along those lines. Importantly, integrity can occur at the individual level and at the organizational level. Corporations can be committed to fair governance and sustainable ethical behaviors and give back to society. Within the workplace, integrity can play out in a number of ways, both on the individual and organizational level. So, individual level, being honest and trustworthy, adhering to company values, being consistent, being professional, making decisions ethically. At the organizational level, we talk about building a culture of integrity through leadership, making ethical business decisions, having clear corporate social responsibility commitments, adhering to regulations and laws, and operating with fair and transparent governance. How does this tie into the world of small business? Well, it's a really big one actually, because in most small businesses, the owner is typically the manager, and the owner may also be the salesperson, the head of purchasing, all kinds of important functions within an organization and how it interacts with outside entities, whether customers or suppliers or what have you. And so, as a small business owner, you are probably going to have to encapsulate all of these things, both the organizational and the personal stuff, to be acting with integrity and setting the example for any employees that you might have to demonstrate what goes on in your organization or what is acceptable and what is not acceptable. Okay. So then it goes into understanding integrity in the workplace. 4 reasons it's important. You could probably guess these things, right? Positive work environment. Obviously, people are going to feel better about working in an environment where it's believed that there's integrity, right? Especially an individual with a high integrity is not going to want to work in a place where it's perceived that it is a low integrity environment, right? Ethical conduct and risk management. So the HSBC example, some of the employees chose to engage in money laundering activities, and it cost the shareholders $1.9 billion in fines, right? So if everyone in the organization was adhering to a strong ethical or integrity standard, that wouldn't have happened. The shareholders would be far wealthier today. Credibility, reputation, and brand image. I personally know of some people who don't want to do business with HSBC because of this very case, right? So they see that as a reason not to do business with someone. And then long-term success, I alluded to that at the beginning, right? If you act with integrity, you are going to be able to make a positive impact on your customers. They are in turn going to want to come back and do business with you again if they have another need, or they're going to share their positive experience with other prospective customers. Now, let's get back up to the first one here, positive work environment. So I mentioned earlier when we talked about how 97% of people surveyed thought that, they wanted to or thought that organizations should have these strong integrity values, etc. Let me tell you a firsthand story of a case where I knew a guy who worked in an organization that did not act with integrity. So this was back in my Amex days, and within Amex is part of that payment and credit industry, right? And so there were a lot of people in the company with me who came from other people in the payment industry. And I asked this one guy, "Oh, you worked at blank payment processor. I'm not going to name them. How long were you there, and why did you choose to leave?" Right? And most of the time, when you ask someone why they chose to leave a job, they would tell you, "Well, higher pay, better opportunity if I came over, etc." This guy told me a story about integrity. So, if you've ever been approached by or called in a business by a payment processor, you'll know that this is a very cutthroat business that is largely price driven. So a payment processor is going to call you and they're going to say, we're going to, come with us and we only charge 2.3% of Visa and MasterCard fees. When you accept credit cards, and then the next person is going to call you and say, we charge 2.1 or we charge 2.115. Like it can get really tight. Uh, because what they're doing is they're divvying up what's called the interchange fee, which is the amount deducted from a credit card transaction off what merchants actually receive. So if you don't know, if you have a $100 restaurant bill and you pay with a credit card, the merchant may only be receiving $97.50, for example. Now, in that industry, if they're always competing on price, what then happens is the price keeps getting bid down, down, down. So how do you make any money? Well, what this guy explained to me was how this particular payment processor makes money. What they do is every month they randomly select a pool of their clients and they raise their rates, just like that. And I thought about it for a moment. I said, "Wait, isn't there a contract?" And he goes, "Yeah, yeah, there's a contract." And so if anybody gets their statement and they notice that their rates have gone up and they call in and complain, then our customer service people say, "Oh my goodness, you're right. I don't know how that happened." And then they put the rates back. But 99% of merchants never look at their statements. And so he was talking about a systemic, institutionalized lack of integrity that was being implemented in this organization. So if you own a small business, check your merchant processor statements. But it was enough to drive him out of that workplace. As soon as he realized what was going on there and what he was involved with, he said, "I'm out of here." Right. And he went looking for a new job. And that's eventually how I met him. So it's important. It's important for how you attract employees. It's important for how the outside, entities will perceive you, customers, suppliers, etc. There's a few examples here in the article. There's a Ben and Jerry's example about the summer of 2020 and the BLM movement. And then there's one here about Patagonia's environmental stewardship. So they make outdoor wear. So being aligned with environmental causes, it makes perfect sense for that organization, right? Um, Leading by example, integrity in leadership, honesty, consistency, reliability, accountability, ethical decision making, courage, conviction, respect, professionalism, empathy, leading by example, adherence to company value, etc. And then it gets into how to promote a culture of workplace integrity. Now, what I have seen, you'll see many people out there who will have a conversation about what motivates people, right? And there are a lot of people out there who believe that money can be a motivator, right? They'll provide bonuses to employees to try to get them to do extra work. I know many people, and you've probably met some people too, where you say, "Wow, that person has so much potential to earn more money if only they would apply themselves." Right. And what you're witnessing is that there are huge numbers of people out there who are in fact not motivated by money at all. They have other kind of motivations that are driving them, right? Um, I remember back in my Yellow Page days when I was working as a salesperson, there were colleagues that I had who would earn a certain amount of commission or a certain amount of money over the course of the year, and then literally just take the foot off the gas pedal, and they would say to me things like, "Well, now I'm in the 52% tax bracket. Why would I work so hard for 48-cent dollars?" And for those of you down the states, you might be shaking your head. 52% tax bracket. Yeah, there's people around the world that end up working for less than half of what they earn, they get. And so some of these guys would just like literally knock off at 3 every day and go golfing. They literally would be not motivated to get those extra dollars. Um, because of how they perceived the value of their time. It was worth more to them to actually go play golf than it was to earn those diminished uh, dollars from working. Now, in the same example, back at the yellow pages, let me explain how we were paid. So we would meet with business owners over the course of 3 or 4 months, let's say, and there would be a deadline for the phone book. And then the phone book would come out 3 months later. And then the clients would start getting billed once the phone book had been distributed. The way that we were paid is we would complete contracts with customers. We would submit them for processing, and the work would all be done by the production people. And then we would earn a commission based on that contract we had submitted. And there were two different options for us as salespeople. There was draw against commission, which is what I did. So every 2 weeks, I would get the same amount of money. And then once a calendar quarter, someone from accounting would reach out to me and say, "Hey, you've got this big surplus of commission in your draw account. Do you want to take a big amount?" And I would, take a check for 10 grand or something. And I liked it because it allowed me to live below my means, get these big windfall amounts of money that I could put on my mortgage or put into investments or whatever I was doing. Other guys didn't do it that way. They worked on straight commission, meaning that every contract they submitted, the full commission would appear on their next paycheck. Now, remember, we're working for 3 or 4 months on a given phone book, and the customer doesn't pay for this until the book is distributed. So, what I know happened with several people on my team many times is that they would be in a bit of a cash crunch. And so what would they do? They would fill in a customer contract, sign it for the customer, submit it to get money on their next paycheck. Now let's think about that. What did they do? They forged a customer's signature, created a false contract that didn't really exist. They did things that were not true. They created false documents in order to get something of value, money. So that's like, I believe that's the definition of fraud. If you're a lawyer, like correct me in the comments down below if I'm wrong. But they committed fraud, right? Is that integrity? No, I don't think anyone would ever claim that it was uh, behaving with integrity, right? And so what they would then do is before the deadline of the book is they would go actually meet the customer and they would rework the file, which would then maybe create a negative commission payout. And so they were trying to manage their cash flow. What would drive an ordinarily good person who would ordinarily think of themselves as ethical to do something like that? It's not because they were chasing money. It's because they were suffering from the lack of money, right? They had a mortgage payment due, they had a car payment due, they felt like they didn't have any options. They felt painted into a corner. And so then they did something that would not normally jive with what they would see themselves doing, right? Let's go back to that Wells Fargo example. Why would people within that organization create fake accounts? Do you think those individuals um, who were these people? They would call people on the phone all day long, trying to get them to take a credit card or open a savings account or whatever it was. What would drive someone like that to go and do what, again, would be a fraudulent activity, right? It's probably because they thought if I don't do this, if I don't post the right numbers, for example, then I'm going to lose my job and I won't be able to pay my bills, right? So it's the scarcity, it's the lack that often drives people to step back from their integrity and do things that they would not normally do. So, just checking my notes here. All right. So, what other kinds of examples have I seen? I would say that I've seen people do big promotions on gift card sales around Christmas time, only to close a business in January, right? Why would they do that? Again, desperate for cash, bills to pay. They've got to make ends meet in one way or another. And at the end of the day, they end up doing something that they know they probably shouldn't do. So if you are going to get into business, whether it's through buying a business or starting a business, what is my big piece of advice to you? Well, a couple of things. Number one, make sure you understand what your ethics and morals are and act with integrity in business. One of the easy ways that you can make sure that you're always acting with integrity is simply ask yourself if you ever are faced with a moment of hesitation where you're like, I'm not sure if I should do this. Here's what you do is you just ask yourself, what if the other party, whether it's a supplier, employee, customer, etc., what if the other party learns all the details around my decision 3 months from now? What are they going to think about what I did? Okay. And this is empathy or consideration, however you want to frame it. It is trying to put yourself actively in the other person's shoes. How will that person feel if they understand in the future after the thing has been done, looking back on it? So if you're in a cash crunch and someone comes to you and makes a deposit against future work, and you take that money and you go and use that money to pay off bills from past work, are you acting with integrity? Right. And this is kind of a famous example that people will talk about from like the contracting industry or many other businesses where people get into this negative cash flow position. They literally rely upon deposits from new customers to cover the losses and problems from the past. Right. So, how do you avoid it? It's by having resources, having money. Right. So, what does that mean? Does it mean that ethics are like some kind of luxury that if you don't have money, you can't afford ethics? I don't know. That's a pretty big question. I'm not going to answer that here today. I know all kinds of people who act with integrity all the time. They've been in business situations where things have gone poorly and they have stopped themselves from doing something unethical or with a lack of integrity. And that often has meant the closure of the business, right? Or a radical restructuring in the way business happens. So if you're not going to have additional resources there to back you up if things get tight or if there's a problem in your small business, then you need to have something else, which is the self discipline to walk that line and keep yourself on the right side of integrity. Because I'll tell you, even if your business fails and you end up closing, the way that you conduct yourself in your business is going to have a huge ramifications on what opportunities may exist for you beyond business, whether it's getting a job or starting a new business at some point down the road. I mean, if you leave a path of destruction behind you with, people you've ripped off and burned, etc., then your options are going to be limited in the future. So there is a self-interest, of course, in being a person that has integrity. Um, and one last point that I want to, or two last points that I want to make on this is that there can be a coloring of integrity, morals, ethics, and values that comes from a person's background. And so people from different cultures, different religious backgrounds, people of different experience are going to have different thoughts and ideas about what is or what isn't acting with integrity. I'll give you a quick example. So I have met people, for example, who come from a background where they've never interacted with anyone in a professional fashion. They've only ever been in very transactional kinds of relationships. And the whole idea of fiduciary duty is foreign to them. So then they get into a business where there's these ongoing long term relationships, and they don't understand that when they take on a customer or client, I think is a better word, that beyond the transactions they're involved with, they've got this ongoing duty to that person, like, for example, what a lawyer would have in a legal setting or an accountant, right? But those fiduciary relationships exist in a lot of different ways. Likewise, people can go into a transaction with someone or get a service from someone believing that they are in a fiduciary type of arrangement when in fact they are not, right? And I've faced this myself in my machinery and equipment appraisal practice, where people will hire me to do an evaluation on a piece of equipment, believing that there's this fiduciary responsibility between us, when in fact the code of ethics of the organization I'm a part of strictly forbids any kind of advocation on behalf of someone that hires us. Our duty is only for the user of the report, which most often than not is a bank, for example. So So how do you overcome that? Well, in the engagement letter that I use, I spell it out very carefully. Like here are what the code of ethics demands of me, and this is what it means for you. It means I do not do this for you. I do not do this for you, and I do not do this for you, right? So that there's a clear understanding. When you let it be known that that someone's expectations may be off and you correct them before you do business with them, that's going to allow them to see you in a more positive light. They're going to have a better understanding of expectations, what they're going to expect out of their relationship and doing business with you, etc. The Another example would be back when I had my business brokerage office open, I had a trust account for trust money for deposits. So if someone made an offer on a business, they would maybe submit a check for ten or $20,000 as a deposit or earnest money, for example, and I had to put that into a regulated trust account. And I got audited by a government official on occasion, and they would look at the money's going in, the money's going out. I had a special ledger for that account. That account could not even have bank fees deducted from it. My other account had to pay the bank fees. My operational account had to pay the fees for that trust account because that trust account was customer money. Okay. And so I would put money in, I would have to record it. I would have to record what conditions the money could come out. If the money went back out to a buyer who maybe said that they weren't happy with the business and due diligence, then I had to record that, get people to sign slips of paper, have all those records for the auditor. And likewise, when a business deal closed, maybe some of that money belonged to me to go against my invoice. Well, I had to have paperwork from the lawyer of the seller saying, yes, this deal is done and the invoice is now due. And then I could use that paperwork to withdraw the money for myself. Very regulated, right? So in 2010, I was at the IBBA conference in Atlanta, Georgia, and there was a fellow from Asia who was talking about his business brokerage. He also operated a trust account and was accepting deposits from buyers. After a while, he realized, hey, my trust account is a pretty consistent amount of money. It never goes down to below the certain level. So what did he do? He started making loans from money in his trust account to buyers to help finance the acquisition of small businesses. When the government found out, they gave him an award for being innovative and helping to create opportunities for people to buy businesses, right? So, where I lived, that behavior would have been considered highly illegal, would have gotten me in huge trouble. I would have lost my license. I would have been out of business and my reputation would have been destroyed. In his business environment, he was rewarded for it, right? And so this is why you have to really make sure that the people you're doing business with, in particular partners, are aligned with ethical and moral values. What is it that we do in this business? What is acceptable? What is not acceptable? What is the benchmark we strive for? For example, a lot of the people that I've coached and consulted with who had problems in partnerships, much of it came down to getting to really know the partner after they got into business with them and realizing this is not the kind of person I want to be in business with. And so one partner starts to have a problem with the ethics of the other partner. But if you met that other partner, they probably would not describe themselves as an unethical person, right? So this is the problem. And if you've run into these kinds of issues in business, and if you've had these kinds of problems, and you want to share the story, please do so in the comments down below. I know that the other viewers would love to read them too. Why am I kicking off this summer series talking about integrity? Because I really do think it's the one ingredient that is almost universal for the success of a business. You need to have a lot of things work well for a business to succeed. But if this one piece is missing, it's going to make it extra difficult. And, you know, how you choose to create, for example, your compensation systems, how you choose to measure people, the standards you enforce, the KPIs, all of this stuff, you should be thinking about this. Because if Wells Fargo was not measuring its employees' success by the number of new accounts that they were opening, there would have been no incentive for people to behave in this way, right? If my colleagues back in my Yellow Page days had sufficient savings accounts to make their car payment for a couple months if things got lean, they would never have had an incentive to falsify those contracts. And it's the same thing with you and your small business as an owner operator. If you have other resources you can rely upon, then you're not going to be in a position where you take a customer's money to pay something that has to do with a past client and then know that if you don't scramble to get the next deposit, you're going to be short on the new client. Like it's a tough place, especially when you know that what you're doing is likely not right. And so don't put your last nickel into a deal. You've always got to have a plan for resources. And if not, have the discipline to know when it might be time to quit. Anyway, with that, I'll say see you later. And all summer long, we're going to be talking about getting into business, whether it's buying, starting, etc. It's all content that's different from what's coming in the new book. And I'd love for you to sign up for the pre-order of the book. Don't forget, it's going to be available on Amazon as a Kindle, paperback, audiobook. The PDF will also be available on my website. Pre-orders can be done right now at the lowest price it's ever going to be. With that, I'll say see you later. Talk to you next time. So, how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.